AMC is making a move to the downside towards the end of the day. Keep in mind, we are still in a very tight range and we are only down about 1.5% on some very low volume. So we're going to touch why the low volume with AMC stock is incredibly bullish right now is the time, in my personal opinion, to be buying as many shares of AMC as possible, because the only reason you wouldn't want to is if you thought that bullish volume was never coming back into the stock. Do you think higher volume is ever coming back into the stock? That is the real question here. I believe that will be the case by the end of this year. We have the Santa Claus rally coming. We have tax loss harvesting that is already starting, but certainly not even close to being over, as well as a lot of option activity in between the month of December and January that will push us higher, or at the very least give us a lot of volatility. Now, on top of that, we did get the FOMC numbers that did come out today, so we need to talk about that. That does have some bearish implications for the overall market, not necessarily in the near term, but it could come faster than anybody realizes, and this will affect AMC. So that's what we're going to cover in this video, and as always, the other data revolving around the AMC MOAS. So hit that like button for me, consider subscribing to the channel, and check out the links in the description for free stock and for the buy and sell alerts. If you guys want to be a part of that, join a trading community, and we have been doing phenomenal over there, so check that out if you guys want to be a part of it. Now, AMC, like I said, down about 1.5% as we currently speak, and the three main things. We're going to start off with a little bit of technical analysis. If you guys are subscribed to this channel, you know the three things, the only three things that matter with AMC stock: resistance and support levels. You're talking about the moving averages and the volume with the stock. That is it. Nothing else matters. Forget the formations. We have had false breakout after false breakout. These are the only things that I am watching. Now, as far as our support and resistance levels, we are just under our support level at about $40 per share, or really $39.50 per share. So we're just under that. I want to see a clean break back above that, or a clean break to the downside. Now, the next support level is at about $37.50 per share. That is where our candlestick wicked literally down to this $37.56 per share earlier in the day today, and we did get a bounce up from that. So that is definitely going to serve as a support level. This $39.50, $40 level is not off the table if we do get a break back above that. If we do fall, then that is going to be our resistance level. If we break above that, that $44 level will continue to be that upper end resistance level. Now, let's talk about the moving averages. This is kind of starting to move against us at the current moment, and the 50-day and the 100-day moving averages are the ones that I really watch. The 200-day moving average, as you guys can see, this orange line is just going to continuously trend upwards. So that just means our support level is getting higher, every day we go, but it only moves up so much because it's the 200-day moving average. The 50-day and the 100-day are big moving averages for trading algorithms. We are seeing those moving averages at about $39.50 per share, $39.80 per share as well. So we're about $1 away from breaking out to the upside above those, but this will serve as another just resistance level as well. Now, if we break above that, that works the same way. Like I said, that'll be a solid support level. So that's basically what you guys need to know. And then as far as the volume is concerned, we're only looking at about 14.5 million for volume at the current moment. Now, we do still have a little bit time left in trading today, so it may be a little bit higher, but I don't expect any huge volume spike. And this is going to come in as the lowest volume we have seen since June. Why is this bullish? That is the thing. That is the main thing that you guys should for sure understand. Now, if we type in a simple Google search, is low volume good for a short squeeze? Any stock is susceptible to a short squeeze, but those with low volume are especially vulnerable. Short squeezes occur when a stock with a large short interest, that is, a large percentage of shares are currently held by short sellers, begins to move higher. So that's what we see time and time and again before the January rally, before the June rally, low volume heading into high volume. So that is the main question right now. When do you think bullish volume or just higher volume in general is going to go into the stock? Do you think it's going to be in the next couple of weeks by the end of the year like I do? Do you think it's going to be years away? I think that's kind of ignorant at this level to think it's going to take a very long time to see higher volume come back into the stock. Maybe I'm ignorant because I just like AMC. I like how we are setting up right now. Let me know in the comment section, do you think volume is coming back into the stock in the near term future? That's literally the only thing that matters with this trade at the current moment. And just considering the option chain, this expiring this Friday, but all the way to December 17th and in between December 17th and January 21st, 2022, just massive amount of option contracts. That's going to cause volatility nevertheless, and that should bring volume back into the stock. Now, expiring this Friday, you are seeing a lot of contracts that are just out of the money. A couple thousand, in between 5 and 20,000 on any given strike. Keep in mind, tomorrow the markets are closed. We will probably do a live stream in the morning or something along those lines. Just because, this is what I do. I like making these videos, talking to you guys. But anyways, I don't expect anything too crazy coming up Friday as well because it's the day after Thanksgiving. Not a lot of people are active in the marketplace, so I don't think anything crazy is going to happen this week, but definitely December 17th through that January expiration. As you guys can see from the Stonko Tracker data, the December 17th, the monthly expiration, already has about 231,000 calls that are out of the money and about 29,274 calls that are currently in the money. Right now, that would need to hedge 3 million shares for AMC, just these calls that are currently in the money. Now, if a majority of these calls go into the money, or all of them for this example's sake, that is about 23 million shares that would have to be hedged for. And relative to the volume that we are seeing, you guys can put that into context on what kind of rally you would see if we do just start to get a couple dollar move to the upside. And that goes without saying, in between, December and January, those are our two biggest options dates for a very, very long time. Like, very, very long time. 2023, nothing is bigger than these dates. So if you're bagging on a rally, I think it's going to happen by January, but I really think you're going to start to see that rally in December as the volume comes in to hedge a lot of these options. And like I said, I'll say that again. Do you think volume is going to come into the stock? That's the only thing that matters, and that is ultimately what should dictate your guys' opinions. If you don't think it is, then maybe wait and hold off buying more AMC. If you do, then I would be loading the boat like I am doing myself. Now, let's move on to that. Let's go over the Ortex data, and then let's get into the FOMC minutes really quick for you guys. So disregard these estimates. That's what I've been doing. We're only getting a 15.18% short interest estimate and about 78 million shares that are sold short. But we got the exchange reported short interest data, and we were at 18.5% short interest with about 95 million shares that are sold short. So given the price action, it's been pretty much up and down. We're back to that range we were at on the settlement day, October 29th. I would estimate maybe 0.5% of the free float has covered, if that, leading us to about 18% short interest and likely still at about 90 to 92 million shares, give or take a couple million shares that are sold short. Now let's talk about the Fed minutes that came out today. So this article says Fed meeting minutes show members ready to raise interest rates if inflation continues to run high. The committee that sets interest rates for the Federal Reserve released the minutes from the November meeting, where it first signaled that it could be dialing back all the economic help it's been providing during the pandemic. Following the two-day session that concluded November 3rd, the Federal Open Market Committee indicated it will begin cutting back on monthly bond buying programs that it had seen it purchasing at least $120 billion in Treasury and mortgage-backed securities. The goal of the program was to keep money flowing in those markets while maintaining broader interest rates at low levels to boost economic activity. In its post-meeting statement, the FOMC said substantial further progress in the economy would allow a $15 billion a month reduction in purchases, $10 billion in treasuries, and $5 billion in MBSs. That stands for mortgage-backed securities. The statement said that the pace would be maintained through at least December and probably continue going forward until the program wound down, likely by late spring or early summer 2022. Investors, though, were awaiting the minutes for a deeper glimpse into what would prompt the Fed to move even more quickly in pulling back stimulus. That's important because inflation has gotten even hotter since the November meeting. In previous cycles, the Fed has raised interest rates to cool the economy, but officials had said they're willing to allow inflation to run hotter than normal to let the employment picture improve. Markets, though, are anticipating a more aggressive Fed. Traders in contracts that bet on the future of short-term rates are indicating the Fed will raise its benchmark rate 3 times in 2022 in 25 basis point intervals, though current official projections are for no more than 1 hike next year. However, those markets are volatile and can change quickly depending on the signals the Fed sends. And substantial further progress, like they were talking about in the employment sector, may be here. The issue is we don't have enough people to fill the jobs that we need filled. Take a look at this. 4 hours ago, weekly jobless claims post stunning decline to 199,000, the lowest level since 1969. So when you tie all of this together, what the Fed has been saying, and the fact that we just hit a record low for weekly jobless claims, I think that we're heading for a rate hike sooner rather than later. And I think investors are starting to price that in as the markets are pretty flat today. Some markets are down more than others, like the Dow Jones is down, but it's the day before Thanksgiving. Markets are pretty muted. Same thing, like I said, likely for Friday as well. Next week will be the telltale of what will likely happen. What trajectory are we going on? Are we going for the Santa Claus rally? Are we going for the Santa Claus breakdown? Is the market's going to head down lower? That's what we're going to have to wait and see. Big implications, though. We definitely have to give this some time for investors to process all of this information. It could, like I said, play into what happens with AMC stock as well. But the only thing that really matters with AMC at the current moment is if volume is going to come back into the stock and when it's going to come back into the stock. Those are the 2 questions you should be asking yourself. Do you ever think bullish volume or more volume is going to head back into AMC? That should be an obvious yes. And when do you think that will happen? So that's going to conclude this video. Hit that like button for me. Consider subscribing to the channel and check out the links in the description for free stock. When you sign up with Moomoo, deposit $100. You will get 1 free share of a random stock in between $3 and $3,500 for opening that account immediately. Once you deposit $100 and that deposit settles, you will get a free share of Lucid Motors 100% guarantee. The current price is about $50 per share. That is a guaranteed over 50% return on your investment. That's probably the best investment you could make right now for a guaranteed 50% yield in a couple days. So that's gonna be all for this video. Love and appreciate every single one of you guys. Watch out later for the live stream. Very excited for that. So that is gonna be all. I will see you guys in the next one.